All right, let's talk about something that drives so many traders absolutely nuts. We have these powerful, proven indicators like the RSI, moving averages, you name it. So why on earth do most people end up losing money with them? If the tools are good, what are we all doing wrong? Well, that's exactly what we're going to get into today.
You know, this quote right here, it's pretty much the whole story. You could have the most sophisticated indicator in the world, but if you don't know how to use it, it's not just useless, it can be downright dangerous for your account. At the end of the day, the tool doesn't make you money. The skilled trader does.
And this is the million-dollar question, isn't it? It's so frustrating. You learn about a new indicator, you see all the potential, you slap it on your chart, and then you just watch your account balance slowly bleed out. The thing is, the answer isn't that indicators are a scam. The real answer is that most of us fall into the same predictable traps over and over again. So that's what we're going to tackle first. We're going to break down the 5 most common traps that can turn a perfectly good indicator into a money-losing disaster. And hey, don't think of these as personal failures. Think of them as hidden pitfalls that are just super easy to fall into if you don't know they're there.
Okay, first up is the classic analysis paralysis. You know the look. Your chart has so many lines and colors it looks like a modern art painting. You've got Bollinger Bands, RSI, MACD, a couple of moving averages, and what happens? The MACD screams buy, but the RSI is way overbought and the price is smacking its head on the upper Bollinger Band. So what do? You do nothing. You freeze, you hesitate, and that perfect entry just sails on by without you, all because you're buried in conflicting data.
Now this next trap is tricky because it feels so logical. You think, I'll just wait for the moving averages to cross before I buy. But here's the problem. By the time those averages finally cross, the best part of the move is often already over. Moving averages are what we call lagging indicators because they're built on past prices. So on a Bitcoin chart, by the time you finally get that golden cross confirmation, the price might have already rallied 30%. You end up buying high just in time for all the early buyers to start taking profits.
Oh man, this one is an absolute account killer. Picture this. Gold is in a brutal, non-stop downtrend. Your RSI finally dips into oversold territory and you think, yes, this is it. Time to buy the bottom. You jump in and the price just keeps on tanking. Why? Because in a powerful downtrend, an oversold signal doesn't mean a reversal is coming. It just means the selling pressure is intense. That signal was completely useless because you ignored the most important context of all, the overall trend.
Ah yes, the endless quest for the perfect settings. We've all been there. You take a loss using a 14-period RSI, so you switch it to a 12. Take another loss, so you decide to use a 20-period moving average instead of the 50. This constant tweaking is a disaster. You never stick with one set of parameters long enough to find out if your strategy even works. You're just chasing random noise, and it absolutely demolishes your confidence. And the last big trap is treating an indicator like it's your boss, giving you a direct order. The RSI hits overbought and you immediately hit the sell button, only to watch in horror as the price just keeps ripping higher, stopping you out for a loss. You have to remember this. An indicator gives you information. It doesn't give you an instruction. You always have to wait for the price itself, like a big bearish candle, to confirm what the indicator is hinting at. So let's do a quick recap. Analysis paralysis? That leads to hesitation and you miss great trades. Chasing those lagging signals, you get terrible entries and stopped out constantly. Ignoring the trend, you're basically picking a fight with a freight train. Constant tweaking, say goodbye to consistency and confidence. And blind faith? Well, you're just going to get steamrolled by fakeouts. Every single one of these traps leads directly to pain in your trading account. Okay, enough about the problems. How do we actually fix this stuff? The answer lies in shifting your whole mindset. We need to go from being a passive signal follower who just reacts to being an active, informed decision maker who's in control.
And the strategy for that is actually a pretty simple 3-step framework. Step 1, simplify. Get that clutter off your chart. Pick just 2 or 3 indicators that work together, not against each other. Maybe one for trend, like an EMA, and one for momentum, like the RSI. Step 2, confirm. Never ever take a trade just because an indicator told you to. The indicator raises its hand and says, hey, you might want to look over here. Then you wait for the price action, like a bullish engulfing candle, to nod its head and say, yep, I agree. And step 3 is confluence. This is huge. Your indicator is just one reason to take a trade. You should be looking for multiple reasons, like a key support level, a chart pattern, and that indicator signal, all pointing in the same direction.
When you compare these 2 ways of thinking, it's just night and day. The amateur trader sees a signal and emotionally jumps on it. The professional sees a signal and patiently starts looking for confirmation. For the amateur, that indicator is the only reason for the trade. For the pro, it's just one small piece of a much bigger puzzle. This is the real difference between just gambling and trading like a systematic, confident professional.
But let's get real for a second. What if you have a great strategy? You know all the rules, and you still can't seem to follow them. You know you should wait for that confirmation candle, but you just can't help yourself and you jump in early. Well, it turns out the biggest obstacle in trading isn't your strategy or your indicators. It's your own brain.
And this concept right here is an absolute game changer. It's called the override threshold. And what it is the exact point where the amount of money you have on the line is enough to switch your brain from its logical, planning mode into its emotional, fight-or-flight survival mode. And listen, this isn't a character flaw. It's not about being undisciplined. It's a biological switch hardwired into all of us.
And once that switch gets flipped, it's a total disaster for your trading. All your logical analysis just goes right out the window. The fear of losing money completely takes over. You start doing crazy things like moving your stop loss down just a little bit more. You panic and close out a winning trade way too early. Or you get angry and throw on a revenge trade to try and win your money back. In that moment, your perfectly good trading plan becomes totally useless.
This leads to probably one of the most powerful mindset shifts in all of trading. If you find yourself constantly breaking your rules, you don't need more willpower. You need to risk less money. It's that simple. By reducing your position size to a level that keeps you below your personal override threshold, you keep the logical part of your brain in the driver's seat. The solution isn't about psychology, it's about math.
So let's bring this all home. We've talked about the technical traps with indicators, and we've talked about the psychological triggers in our own heads. So what's the real takeaway here? Where is the actual signal we should be looking for? At the end of the day, the real signal isn't an indicator crossing a line. It's the confluence of everything. Your indicator, the price action, the market trend, and your trading plan, all seen through a calm and logical state of mind. An indicator's job is to give you information. Your job is to be the skilled interpreter who puts that information to good use. Now, I want to hear from you. Thinking back on those 5 traps, analysis paralysis, chasing signals, ignoring the trend, constant tweaking, and blind faith, which one has been the biggest pain for you? And more importantly, what was that aha moment that finally helped you get past it? Drop your story in the comments below. You never know, your experience might just be the breakthrough someone else is looking for. Thanks for tuning in.